Vandana Hari from Vanda Insights joining us on the show right now. Vandana, hi, morning. Another downtick of 10% coming in on crude. What explains it?
Hi, good morning. So what has happened over the weekend is that we just have more news and data, quite heartening in terms of the pandemic that continues. In the U.S. especially, we had, the governors of the worst hit states taking issue with Trump's claims. So, of course, there's a lot of politics getting mixed up in this as well. But the picture that does emerge for the oil, that the U.S. is still unsure as to when the worst hit states could start easing the lockdown. We saw the lockdown extended in the UK as well late last week. Some of the countries in Europe are opening, but very, very cautiously. India, of course, still remains. India also last week extended its lockdown. So here's the big picture. Demand is going to continue to perhaps go for further. We have already seen at least through this month, and nobody can see exactly when and how we will come out of this demand slump. So that's putting fresh downward pressure on crude prices this morning.
Vanda, I'm just looking at simple numbers, and if one works with an assumption that oil stays where it is, which is in all probability it would, then what we are looking at is we are looking at almost 1/3 of the world going bankrupt, because oil below $30, $25 means oil producing nations, countries like Russia, US shale gas companies, they will find it impossible to economically run their business. So I just fathom that if 1/3 of the world is going to go bankrupt, so then we are staring at lower oil prices, bigger pain and bigger cut in terms of decline. On paper, the policymakers in India will say, oh, crude down, great news, great news. But fundamentally speaking, if 1/3 of the world is going to go bankrupt, that's a bigger problem rather than celebrating the oil decline, which is what our policymakers are doing.
Yeah, you've raised quite a few important points. So one of those is cheap crude really of much help at this point to consuming countries? The answer to that is obviously no. It can prove to be a tailwind when the economy is doing reasonably well. The other point that you've raised is, what next? And increasingly starting to look at and ponder over, what's the new normal going to be like? And we are seeing companies starting to crumble, and some very good ones, and major in Singapore, a major, very well-established oil trader, Hen Leong, that's been the talk of the town, filed for bankruptcy late last week. So if behemoths can just fall like that, you have to wonder what some of the smaller companies will do. So you're absolutely right. What kind of a new normal do we emerge in? Let's say, if you're talking about the second half of this year, could oil demand get permanently depressed? Could we have already seen in the history of the world the oil demand peak last year? So all of these questions are very valid questions, and they are again a lot of good questions that we don't yet have answers to. But overall, what it does is that it really kills any kind of optimism at this point with regards to the economic growth or oil demand growth.
No, Vandana, I think the last projection by OPEC said that this is, they're projecting the lowest crude demand since 1989. So a very dismal outlook that they had come out with. If we try and align it with some kind of an opening up of the world economy, let's say by mid of the year, as you were saying, some industry reports suggest travel will only pick up in certain regions even later than that. What's your sense? I mean, do we see oil seeing a decent recovery, or has the pain been so brutal that we're going to pretty much stay within this range for an extended period of time?
So prices and how they behave going forward is going to be a function of how demand recovers post-COVID and how supply is managed by OPEC and its allies. As far as demand is concerned, it is now almost given that we are going to end 2020 with hugely lower demand, compared with last. And on an average basis, as well as on a Q3 and Q4 basis, I think OPEC's relatively optimistic. The IEA has a much more pessimistic view, looking at 9 million barrels per day drop year on year in 2020. So in terms of reopening and which kind of oil demand resurfaces first, I would think probably diesel would see some sort of a revival first, because in a cautious opening you would first restart the movement of goods. I think gasoline will be probably be the next. I think personal driving will remain curtailed for especially for non-essential purposes, and probably jet fuel demand will be the absolute last to recover. I don't even see it. I wouldn't use the word recover for this year. I think a lot of the air travel will remain under restrictions by governments, as well as just personal choices. People will want to travel less as a precaution for both for business purposes as well as travel and leisure purposes. So picture that.
Oh, absolutely. Vandana, great to have you on the show. Thank you so much for taking the time out with that quick take on crude and the kind of fall that we've seen in excess of 10% coming in over the weekend.